right? And also in conjunction with the Bollinger Bands, you'd actually see that the market hit that lower Bollinger, that is the middle Bollinger, the 20 moving average minus the standard deviation, that gives us the lower Bollinger, and it was the market failed to break to the downside as it always does. Hello and welcome to this exciting video where I'm going to transform this using synthetic indices and also currencies. So before we jump right into it, I want you to make sure that you subscribe, because once I reach 10,000 subscribers, I'm going to do free live trading sessions whereby you can just copy my trades live here on YouTube. So make sure that you don't miss on that exciting session that I'm going to host. I'm going to host something like 5 live trading sessions that you can also join and elevate your trading skills. So before we jump right into it, I also want you to create an XNES account and a World Trade account, because I'm going to use those 2 brokers in my trading sessions. And also make sure you join my Telegram channel. This is where I'm going to put my my insights and also the updates on when the trading sessions are going to take place. So without wasting much of your time, let's jump right into it. So we are going to start with the volatility with step index 500. So these are the 3 major points that we are going to put the order blocks, right? So this at the top is called the high, which is the resistance, right? And then at the bottom is the support, right? This is a low point, right? So these 2 areas can act as our order blocks. If the market is ever to the point where it touches the resistance at the top, we will know that the selling pressure at that point will be very high. So if it fails to break to that upside, it means we will be aiming for a sell signal, right? And then at the bottom is just the same. We'll aim for buy signals if the market ever fails to break to the downside, right? But however, we cannot only use that as our confirmation. We have to draw other lines that will confirm whatever that we think the market is going to do. So right now, as you can see, there is a clear picture that the market is in an uptrend, right, forming a channel that is more like a rising wedge. But however, this one is a little bit different because it did not end up from the upside, right? It ended from the downside. But however, it is just the same. It is always the same. It signals that the market is now facing a little bit of a difficulty going up, right? As you can see, it is now consolidating a little bit. So we will be aiming for the time when the bears gain the power to break to the downside, and then we sell, right? But then, however, we can use to the lower time frame where we can actually identify other areas that can be of any use to execute our market right here. So in the lower time frame, there was actually something that signaled that the market wasn't going to break to the downside anytime soon. This is the inverted head and shoulders that is right here. So as you can see, there was sort of a downtrend, right? A downtrend at this point, but then there was more like a stagnant support at the bottom that signaled that the bulls were holding a very firm line, right? So if the bulls were holding a very firm line, it means that the market is not going to break to that downside in any moment soon, right? But then in the lower time frame, we can see that there was also another inverted head and shoulders that was very immediate, meaning to say that all the signals are aiming for a buy, but then this buy is very short. It's just a very short buy where you can just buy it up to that point, because overall the market is going to sell. And then if we are to use the Bollinger Bands, I'm pretty sure I've already told you how to use the Bollinger Bands. This is how you set it up. If you don't know how to set up the Bollinger Bands, you can just check one of my videos. I will be explaining that. Anyway, I've executed, so we will use that top Bollinger as our take profit. However, I'm not going to hold this for a very long time. As you can see, I'm actually scared this might escalate and go to the downside, because we know in the long run the market is going to go to the downside. I'll actually show you when the market goes to the downside, but then however for now I'm going to buy and just set a take profit, right? Just at $6, and then I'll exit the market. So basically this is the setup, and then in the long run I'm going to sell this. Right, after some time my take profit has been hit. Now I'm in $30. This is actually 20% of the equity that I had, which is more advisable to beginners, because you wouldn't want to gain a lot of profit just in one trade like I do in most of my videos. That is actually the risk that I take, and also it is just for educational purposes. I don't invest the money that I'm not willing to lose. You always remember that. Never invest the money that you're not willing to lose. So usually when you see me holding the market for a very long time, it means I'm ready for anything that happens. Of course I wouldn't want to lose the money, but then I know that if I lost that money, it is still okay, right? So make sure that so I've put a sell limit that signals that if the market is ever going to touch that point, that is where we are going to trigger our sell, right? That is exactly where we're going to trigger our sell. And then I'm just going to scalp. I just scalped a little bit, but then if the market is ever going to go to that upside point, we will use that as our trigger, right? We will use that as our trigger. But then however I'm just going to I'm just going to execute it manually when the market reaches that point. So make sure that you guys are in my YouTube channel, you have subscribed, and also joined my Telegram channel so that you don't miss on any updates that I post, because it's going to be very, very, very fire. It's going to be lit, guys. It's going to be lit, because we are going to trade together. You will be commenting anything that you want. If you want me to execute any trade, or if you want me to analyze any trade, you just put it in the comment. I will analyze it live on YouTube. It's going to take something like more than 30 minutes while we are trading, and we will make sure that we execute something like 2 or 3 trades in that one video, so that you can just just get the insights of how I do it live on YouTube. So I'm going to exit this trade. I'm going to exit this chart and look for another chart elsewhere, because this is taking long, and also I have a gold USD trade that I want to take, and this is one of my favorites lately, so I'm going to make sure that I get the most out of it. Okay, so in this video I'm going to analyze this chart, and as we go to the gold USD, so we're going to trade the gold USD in the 4-hour time frame. So first thing that we do is I'm going to shift to the 4-hour time frame, and then I'm going to analyze it using the top-down analysis, right? So the first thing that we need to do is, of course, we need to change our template. Let's use this template, of course. So what we are going to do is we are going to use the top-down analysis, of course. So the first thing that we need to do is we need to draw the trend lines. As you can see, the market is going from this point up to the top point, right? So we can clearly see that the market is in an uptrend, right? So since the market is in an uptrend, remember to always draw your trend lines touching the wicks, like for example at this point, not the body, right? This allows you to make very accurate analysis, and also to view the market as it does the fake outs and all those things that it does. Anyway, the second thing that you need to do is, now we want to draw the support. Since we drew the resistance at the top, now we are going to draw the support. right? So you can clearly see that these two lines have been respected quite a number of times, and the market is going to continue respecting them until it breaks to either one or to either the upside or the downside. So with this information, we cannot make a clear judgment that the market is going to buy or to sell. So what we are going to do is we are going to use the top-down analysis. So this is the view in the 4-hour time frame. Another thing that you need to do is we now need to make more analysis so that the market becomes clearer. So this is a resistance point that was respected quite a number of times, and of course there was a weekend where the market closed at this point and then opened at this point. But then, however, this doesn't necessarily mean that the market is going to continue buying. But however, it was a big move over the weekend. So what we are going to do is we are going to look for the 1 hour time frame and analyze it in the 1 hour time frame. So in the 1 hour time frame, as you can see, there was a resistance point that was respected at the top, like at this point, right? So let's just adjust this. Okay, so as you can see, this point was respected. Of course, it was broken to the upside. This was just a fake out, but then however, it is a firm resistance. So the other thing that you need to do is also draw a line at the bottom that was respected at least twice. So now you can see that we are narrowing down our analysis to the lower time frames. So we can clearly see that the market is going to either break to the upside or the downside, right? Now let's move on to the lower time frame. Let's move on to 15 minutes time frame. So as you can see, these points were still respected even in the 15-minute time frame. We can clearly see that the price is at the resistance at this point, and if the market is ever to break to the upside, it will continue going to the upside. However, it is less likely to happen since the market is more likely to break to the downside, since this is more like a pennant, or somehow it is more like an ascending triangle, right? So if the market is ever to break to the downside, it will reach to at least this point. This is a point of resistance in the 4-hour time frame. This line, we actually put it in the 4-hour time frame. So this is the importance of the top-down analysis, because it allows you to view the market from the higher time frame going to the lower time frame. However, we cannot make a judgment using that information that we have, but however, now we have a better picture of what the market is going to do and the points that we need to take note of, right? In the 5-minute time frame, there are two red candles, meaning to say that the bears have been dominant for the last 10 minutes, but we are not going to use only that as our only two, right? So what we are going to do is I'm going to analyze the same thing on my phone, and then I'll execute the market. So once I make my analysis, I'm going to execute this market. However, I'm going to show you my balance right now so that we can make our judgment. So this is the balance. The balance is 1,600, right? So we are going to execute our market right now, because now I've seen that the market is going to sell for some time. So it's time to execute the market. So we're going to place new order. I don't usually use the desktop version. I usually use the mobile version, but however, I'm just going to try so that you can understand. And unfortunately, the market is not executing. I don't know what's happening, but I was hoping to see something pop up so that I can execute the market. Anyway, I'm just going to execute this. So so this was our this is our execution, right? So the volume, the stop loss, the volume. Oh, this is the volume. So I'm just going to say sell. Okay, so I've sold. As you can see, I've sold at this point, and this is my profit. So I'm already in $10 profit. I don't know, maybe it just spiked when I entered, but I'm going to enter more positions. So you know, I'm going to enter more positions. So I'm just going to increase my volume, and then I'm going to put a 10-cent lot and then leave the market. Not enough money, I couldn't execute. So let's continue. Let me reduce this to at least 4 cents. Unfortunately, I cannot execute this one. I don't know what's happening, but I actually ended this same gold USD in the previous trades using the same account, and I actually executed a lot of positions. I don't know what's happening here, but then as you can see in my history, I actually executed these gold USD, and they gave me $73 profit each. But I don't know what happened, so I don't feel like using the desktop version anymore, because these trades I actually executed them using the mobile version. So I'm going to continue the same video using the mobile, and let's see how much we can get from this trade. This is actually a long-term trade, because you know I'm going to hold it for a long time, because I think this was supported even in the 4-hour time frame. So let's just shift to the mobile version. I'm going to continue this using the mobile version. As you can see now, that same trade that was in $16 profit is now in $6 loss. So I'm going to make a further analysis. As you can see, in the mobile version, there is a Bollinger Band that was hit at the bottom. At this point, there was a Bollinger Band. There was a Bollinger Band that was respected. So it means that there was a Bollinger bounce at this point, because this lower Bollinger acts as a support that was respected. So that is why the market spiked to the upside. So if you are a scalper, that means that you should close this trade. But however, I'm not going to close, because this is a higher time frame trade, and I'm going to take a long in this market. If I make the loss, I'll just take my loss and then leave. But then the most important thing is that you learn how to execute. But however, if you are a scalper, you would actually execute at this point. You would actually execute a buy at this point, because there was a Bollinger bounce. Of course, you would need more confirmation from the left side, because you cannot just use this without adding more analysis to your cause. However, if I could scalp on this one, I would actually use this as my analysis. As you can see, there was a right shoulder, a left shoulder at this point, and then there was a head, meaning to say that this could be our left shoulder, right? So it would mean that, and then this could be our head, and then this one will be the right shoulder, meaning to say that the market would buy, right? And also in conjunction with the Bollinger Bands, you would actually see that the market hit that lower Bollinger, that is the middle Bollinger, the 20 moving average minus the standard deviation, that gives us the lower Bollinger, and it was the market failed to break to the downside as it always does, and it bounced to the upside. So you can just scalp. Right now I would have left, I would have actually closed, because the market has reached the middle Bollinger that will act as our take profit. So this is, I'm pretty sure this is quite clear, because I've actually analyzed the same market, but I've actually supported two executions that are actually contradicting, a buy and a sell. And in the short run you can actually buy, and then in the long run you're going to sell. As you can see, the market is already selling. So this is this is what I had, and let's see if we can make much profit from it. But I'm just going to close for now. Okay, so after some time, as you can see, we are in profit. We are basking in profit. So it tried to exhaust me. As you can see, I actually ended at this point. This is where I ended, but then the market went up with me and then down, back and forth, trying to exhaust me. But however, I knew that the market was eventually going to sell. So in the longer time frame, as you can see, we are actually in a downtrend. So we are I'm just going to put the line here. So this marks a resistance at the top, as marked by those wicks. We can clearly see that the market is going to sell for some time. So this is basically what I had. And also remember, you can always choose to exit at this point, or you can just put your take profit at this point. This is the opening of the week. This is where I can put the take profit, but however, I'm not going to hold it. I'm just going to close and maybe look for another trade elsewhere.